Hey everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, March 11th, 2025. So this market's moving pretty fast right now. It's hard to have a position, and if it's going the wrong way on you, have confidence in whatever technical analysis that you're using, even if it's going to be right most of the time. And so that happened to me here when we were coming down. I sold the 5505, I think. I'm not 100% sure. Hang on one second. Yeah, I sold the 5520 and the 5510 puts. Again, just using history that we really don't go straight down. But we got it started coming down like this, and then when it popped up, I got to even, and I just said, you know what, I'm not going to play this game anymore, because that's what happened yesterday when I messed up the stop part. So anyway, I got out of that. It would have worked. Anybody who took it in the room, you had a little bit of stress right here as we made it to 55.28, but closed well above it, and the premium would have been collected. But I ended up doing more of the straddles, meaning that I was going market neutral for the market either had to go up or down. It just had to go more than 30 points or whatever I paid for those the calls and the puts, and we actually did pretty well with it. I did after the mess up, the brain fart move without putting a market order stop on the trigger, and I got crushed. I made a majority of that back, so we're back in good terms overall. I was happy about that. But in any case, so here we opened up. We looked like they were going to try to break out of this, where I was looking for an ABC move. Never made it above the highs, and from there we started getting tariff talks again. What it is, it's a short term volatility trigger, because as I said, your professional traders or your hedge fund managers or your money managers, they're really not paying attention to those, because like I said, as fast as the market's gone down on that news, they can turn around and say, okay, no more tariffs, and now the market goes back up. So nobody that manages a lot of money is really even worried about that part. And I think I explained in the morning notes today that what's happening is there's a mass cleanup going on in our government right now, and it's something that I don't think anybody has ever done before. I know President Clinton did, he let go some 400,000 jobs when he took office and cut the deficit and did everything. But our government is almost 10 times bigger than that. So, if they're going to spend money on, I forget where I read this, but, if you're going to buy a tank and one person's there and spends the money on the tank, that's one, so the tank costs this much. But when you have 25 people evaluating what they should pay this and that for that same tank, now that tank just got quadrupled, and this is what they're cutting. They're saying they don't need as many people that are in places that they are. And the thing is, this is what the market is reacting to, because they're forward looking, and when they start cutting, jobs, obviously unemployment's going to go up. And when they are going to cut spending, because right now, during the past 4 years in the Biden administration, our GDP was basically held up by our own government. So it was a shell game, because basically they made the numbers look good, but it's not sustainable, meaning that the government can't spend $1 trillion every 100 days to try to keep the GDP above 3%. If they didn't spend that, it probably would have been down at 1% the entire time. So it's things that I've read and I've been following for the last 2 years, where everybody was kind of shocked that the market was staying up as strong as it was, because we were kind of in a recession, but none of their economic numbers were saying we were in a recession. But the thing is, once you stop sitting there and the government funding the GDP and funding the unemployment, once that stops because it's not sustainable, what's going to happen is GDP is going to go down and you're going to see unemployment go up. But they're for the right reasons. They're not for the wrong reasons. And I think a lot of your big firms are starting to position their portfolios for a recession that most likely is going to be hit. And like I said, I'm not blaming this on the Trump administration for this one reason. He just took office, first of all, and what is going on is needed. And even the majority of the people being polled right now agree with what they're doing. And hopefully they can succeed without putting us into a depression or anything, but I don't think he would ever do that. Obviously, he would change course. But in any case, that's what's really shaking this market. The tariffs, yeah, that gives us the jolt here and there. But in any case, let's get back to this. I'm sorry for that rant. So we came down once we got down to these levels here. It's better seen on the 50. Here you can see we were coming down. We had some nice bullish divergences here. And this is the pattern that I was following. You can see low, low, and I just drew the trend line here. And then from this is it's a falling wedge, that bearish wolf wave that I talk about. And here is your upside target. So we got pretty close to it. And this is where, like I said, once we got above here, I did put the market neutral straddle on, and I had, the puts that were going to go below here, but I had kind of close to the money calls and was able to, make some pretty good profits on that trade. And once we got up to these levels, I kind of knew we were going to pull back. I didn't really do anything on the short side from there because I wasn't sure if they were going to try to trap some bears and then bring it back up. But overall, like I said, decent day with the fund. Made a majority of what I lost yesterday on the Numnux trade back. So anyway, this is obviously what the bulls have to get through. This resistance line, this moving average. So that's right at the 56.35. Mark it on your charts. This is important. If they get above it, they're then going to make a move up to the 56.68 or possibly even a little bit higher up right here at the 56.72. So this would be the short-term target if they decide to hold it. Now, we broke through this, and now you can see we may be doing a back test. I'm not saying anything with confidence in this market because it's absolutely insane. But anyway, maybe they're doing a back test of this. If they do, then really the easiest way to try to figure out where the top would be is, let's just say that they do. Let's say this is the low. Then what we're looking at is a top coming from an ABC move up to the 56.77. Now, if they get above that, then we're looking at moves coming into these levels here. But remember, we still have this gap up at the 57.67 level. So this is what I'm eyeing, and I'm saying this will be filled sooner than later. But the thing is that it's a matter of where is it going to get filled from and when. We're still in a very volatile time. The VIX did spike up today. It closed down almost 4% at one point. I don't know the actual close on it, but in any case, we're getting some fear in this market. Now, one other thing I want to show you, and one of the reasons why I do not believe that these are the lows, and we're going to go to hang on one second, bear with me. Okay, so this is one of the reasons why I do not believe that the lows are in, and I think they will be in when we see one of these spikes. But this is it. So the last time we had the put call ratio at these levels, this is going back into 2021. We came pretty close to that level right here. But notice this little dip right here gave us a massive spike up. So people were on their toes waiting to cover on it. We brought back up, it dipped it down. And then when we started falling, you can see this spiked back up again. And this was the distance that the S&P fell from the top here to the low. And that caused the spike to go all the way up here. We made this move from the top. We're approaching 10% on the downside, and so this was that move right here. This is the same distance on it, But look where the put call ratio. We still haven't even got above the previous highs from when we were here. So my take is that these guys got to get washed out before I think a true low is going to be in place. So going back to the charts, we had some bullish divergences overbought right here. This is one of the wolf waves that I thought may have been in play, but we went down too far for it, so I'm just going to delete it. So the Bears, I meant the Bulls, they're going to have to hold this 55.28 level. If they don't hold it, then the next support area let me do this. It's probably easier. The next support area, you have some right here at the 55.09. And then we come down to this 54.09. So this is support again, but man, we're pretty that's a pretty good drop right there. So if they lose this, I think we could see panic coming down to these levels. It would not surprise me. But if they can hold those levels and say come down and then take these highs out, that's where I'm looking that we're going to make this move somewhere up into the 57.50 level. And coming from the 55.20, that works. It's a 200-point move. So I'm open-minded for another test or a slight break of these lows right here, but I'm just going to leave it at that. I'm not really taking a side until the market opens because we could see the S&P down another 100. Who knows in this market? But in any case, the upside target will be someplace up here. If these lows are taken out, then we're looking at a move at the 5,500 down to the 5,400. So this is another concerning thing. If you are a mega bull, here is the bullish divergences that we had that had me thinking we made a short-term low and we were going to come up to these levels here, has now gotten wiped out. So this move right here, if it comes up, say, to 38% retracement, 57.64, close this gap, bring our momentum up, and if it takes it out, then maybe we will see some bullish divergences. But I don't think we're going to have choppy markets pretty much throughout March, and once we get into April, maybe we'll have a little bit more of a friendly market. But for now, look both ways. That's probably the best thing I can tell you. So have a great night, and I'll talk to you guys in the morning.